Well, welcome once again. This is the Doctor of Digital, and I'm also have a special guest today, and this is Bozidar Jovanovic. And this is a person who is, and I would definitely say, having read his newsletter and knowing him, chatting with him before, this is no nonsense financial advice for free thinking, freedom loving people. Now, if you think that the banking financial situation is secure, you shouldn't listen. But if you have been noticing things are a little bit less than secure, and I'm very happy to have Bozidar on today because I think it's going to be very useful, very helpful, because we want to talk to free thinking and freedom loving people. And the both of us are freedom loving and free thinking people. So stick around to the end of the podcast episode also, and we'll have a little bit of a gift for you as well. So, with that as an introduction, Bozar, thank you for taking out some time and speaking with us today. Tell us a little bit about yourself and your background, and let's get people excited about hearing what you have to say.
Very good. Thank you, Mick. So thanks everybody for having me. So my name is Bozidar. I am own a financial advisory business and a financial advisory business that is focused on being a no-nonsense advice, which means cutting through all the clutter and things that you can see on from the talking heads. I came to this business a long time ago. It's my 25th year, fresh
Awesome.
after finishing graduate school.
Mhm.
I'm a physics PhD, and I went into finance, which is not so unusual uh, for those of us who are in the business, but it may sound interesting for people who are outside. A lot of people with hard science background went into finance to use our training and knowledge to apply to financial problems. So I've been in different hedge funds and long only funds, and finally, my last corporate job was to be chief portfolio strategist of a private bank. What does
Awesome.
that mean? That's the person who sets up the portfolio allocations, who shows the direction for investors, and
Okay.
that's a person for whom the people go to get their portfolio allocations.
Got it. Now, this is really interesting question, I think, because things have changed so dramatically. So I'd
Yeah.
like to hear what you have to say about some of these things that are some of the biggest changes that you've seen in the banking and the financial
Mhm.
world over the course of your career.
Yeah. Well, number one thing is, of course, digitalization. Finance and banking are very keen on picking up the trends. And now with all the fintech companies out there,
Mhm.
there is lots of innovation going on, from the blockchain to all different
Okay.
kinds of innovation. One of the biggest trends in advisory business was the rise of robo advisors. Especially the younger generation likes to being on the phone all the time, likes to have that thing done digitally. However, it turns out it's not exactly the best way to go, because
Okay.
if you really trust someone and want somebody to help you with your finances, you also want to pick up the phone and hear a person talking to you. You want an
Mhm.
explanation. You don't want to be on a screen and just uh, you know just look at the numbers, because especially when we had a year like the last one, or like the events that we have with the Silicon Valley Bank,
Yes.
you need somebody to be there to explain things to you.
Mhm.
And to know, that particular part of the change kind of went aside, is you saw that UBS tried to buy Wealthfront, which was one of the bigger robo advisor companies, and after about 2 years of wrangling with it, decided to sell it off because they
Okay.
realized they can't make money.
Imagine that, a government entity and, can't make money. So, one of the things that now you've said about the changes, I'm really curious if we can unpack that a little bit. What
Mhm.
would you say are some of the hot growth areas? And I think you touched on a little bit when it's a younger generation. So, tell us a little bit, if you could, and expand upon some of the hot growth areas. And I'm thinking here of all the things that a lot of people hear about, that is crypto, blockchain, all of these kinds of things. What sort of impact do you see that having on the financial world?
So there is lots of, digitization is here to stay, and there are always going to be good tools that come out of it.
Mhm.
So uh, being able to see your account at any time is good. So being able to send me a message saying, "What is this?" It's a good thing. But automated advice so far hasn't worked that well. Crypto, on the other hand, good idea. It's great to have a currency that would be independent of the irresponsible behavior of the central banks.
Correct. Yeah.
Fortunately, crypto isn't it. It seems to
Okay.
be that the volatility of it is very high.
Hmm.
And I actually did an analysis for my clients around the start of Ukrainian war, which is basically an unexpected crisis where reserve currency, reserve money like that should thrive. Turns out wasn't that good. It actually very much correlated with stock market, which was shown because it actually dropped off as well. So that is an innovation. A lot of people got swiped into it, but I personally do not advise people to be in crypto because you're going to lose a lot of money.
And this is one of the things I said, the pros and cons, because I'm hearing these stories and I get contacted all the time, probably like a lot of other people, get into crypto and I'll teach you and I'll get you to help and what have you. But you made a point earlier that I'd like to go back to. You said somebody should be able to pick up a phone and be able to actually talk to someone and
Mhm.
explain some of these things to people. But I also find people that who are just saying, "Oh, I can be on my phone, I can do crypto, and I'm going to make a gazillion dollars." So maybe you could respond to that.
I would say, given the way that the trading is gone into crypto,
Mhm.
there are indication that there are a couple of whales behind the market who are trading off all the time, and that people lose money if you're trading in small batches. So um, I would say the market is opaque, and so it's whenever something like that happens, it is not conductive to individual investors doing any work in there. You are actually gambling with a lot of your fortune being in crypto market.
And then you had said again, made a reference to the central banks. How do you see crypto and blockchain, encryption, all these things that people talk about in relationship to central banks and the government's role in regards to this area?
Well, governments are trying to see what how they can profit from it. China already has created a digital currency, um, and I would say it is a concern rather than a good thing, because digital currency can restrict the amount of money you can spend,
Hmm.
and you can be
Mhm.
controlled easier that way. Remember what happened in Canada with
Sure.
truckers.
Sure.
Um, I would say if Chinese government is pioneering something, we should definitely be concerned about that,
I see.
because we don't want that model applying anywhere.
And
The system of social credit, the system of restrictions. This is not something we want to have. Yes, the Fed has a project for a digital currency. Um, I don't know how far they're gone, but it's actually known that they have a project that's testing stuff right now.
okay. So it's probably not a good idea to adopt the Chinese model, and it's probably not a good idea to interact with the central banks. I think that's what you're saying, correct?
Well, we have no choice. Central banks are there; they have powers, and what we need to remember is that their task is to try to keep as much price stability as possible, so to keep inflation in check. Obviously, Fed wasn't exactly on the ball here, and that's why we
Right.
had a rampant inflation. But they are not going to worry too much about keeping your wealth. Their job is to keep price stability. So if that means that throwing the country in a recession, they'll have to do it. And that's what we are seeing right now. Even after the banks collapsed and all that, they had to raise rates another time. So that's the thing. As far as China is concerned, I grew up in Eastern Europe before coming to US,
I see.
and yeah, that is not a model that you would enjoy. Let me put it that way.
Yes, I
it
back
A
in the day
society
when I was in
organized in those principles is not exactly the happy one.
when I was in college, my Marxist history professors would say this was socialism with a human face because they try to
Mhm.
spin it as if it was a really good model to imitate. I go, well, the reality seems to be something different.
I would advise anybody who thinks there is a human face there, uh, read a book by Alexander Solzhenitsyn called
Oh,
Gulag Archipelago.
yeah, excellent book.
Uh, It's an excellent book. It tells you exactly how it is.
Mm.
Many people think it's a human phase that all these deteriorated because of Stalin. Actually, no. Do you know when the first gulags springed up?
Where's
In 1918.
18? Oh, right after the revolution.
Right after that,
Mm.
right after, it was their leader Lenin who started them.
Mm.
That's the thing. People don't know it, and people like your Marxist professor would definitely uh, have an interest in kind of trying to hush that part out. But that's the reality.
So,
So in any case, we may be facing some sort of digitalization in terms of currency.
mhm.
I'm certainly hoping that the Congress will have enough salt to stop any kind of elimination of paper currency. And yes, it would be good to have something that's independent of the central banks, but I don't see any of that on the horizon right now. The only thing that it's the inflation hedges. It's actually owning real estate, owning commodities. That sort of thing has proven to be a hedge for the rampant inflation.
So those would be the kinds of things that would be the better investments you feel at this time.
Yeah.
Gotcha. Well, a lot of people are very interested in saying, I want to be able to have a good financial outlook for my business or as
Mhm.
individuals as well. What would you recommend that people, you would say, generally recommend them to be looking at currently in the financial world?
Um, it's not easy. I can tell you that it's not easy. I mean, the statistics show that Americans would rather 67% of Americans would rather go to see a dentist than speak to a financial advisor,
It's
and
not
it's not
surprising.
surprising. It doesn't. I am on the inside of the business, and it's not surprising. The reason is that the entire industry is structured around sales. I am an exception in that I don't come through a sales channel. I actually come from portfolio management and asset
Mhm.
allocation. Um, but a lot of the stuff is sell this, sell that, sell this, sell that. Here's the product. Here's another product. So
Okay.
it is perfectly understandable for me that people are wary of it. And then it doesn't help that every week you hear that somebody has stolen 100 million here, somebody's stolen
Yeah.
50 million. It's not on the matter of size, but you read these things, and at least they come to me through the advisory news, and this one has been convicted, and that one has been convicted. I'm like, what are you people thinking? So it doesn't make things easier. I would say you want to look at for a fiduciary. Fiduciary advisor would be somebody who is obliged to put your own interest in ahead of their own.
Hmm.
Usually, it's better to get that through to an independent, and I may be biased here because I have an independent advisory (RIA). But the thing is, the fact is simple. If you are within a big firm or within a bank, there are
Yeah.
lots of conflicts of interest. If you're in a big bank, they have beautiful resources. There is no question about it. But there are two things. If you don't bring them at least $20 million, you're going to a call center and you're going to be
Mm.
serviced by somebody who is 2 years out of college,
Yep.
because
True.
all these good services need to be paid for. And guess who is paying for that? Your
Yeah.
fees. And then they do have other businesses. They syndicate issues of different securities. They do mergers and acquisitions. All this stuff has an impact on best interest advice. If you are going with somebody who is independent, they cannot offer you a mortgage loan,
Mhm.
but the advice will be in your best interest. And that's one of the things I would say you look for. You need to talk to people and just see what they're doing, and see what kind of advice they're offering to. Then you can assess from that if this is really in your best interest.
I see. So, knowing a little bit about your background, I know you have expertise. Could you tell us a little bit, because you definitely have said here the distinction between
Mhm.
yourself as a financial advisor as opposed
Mhm.
to where people traditionally go, but what sort of expertise would you offer businesses or individuals if they were seeking financial advice?
So one number one thing for my firm is called Honey Badger Advisors, and the reason why it's called like that is because honey badgers stand up to lions and hyenas, and you can see the implication of what I think about it. But the idea is that I will tell you what others don't, because I don't have
Mm,
other conflicts of interest. I don't have
mhm.
other businesses than this. Um, but my expertise is in asset allocation. I did a lot of, as I said, hedge fund investing and allocations for institutional investors. And now we have the ability to use some of those techniques and methods to bring it to my clients. And the example is that while the markets melted down last year, my clients were at least 10 to 15% better than the
Wow.
best providers as like Wisdom Tree. So there are methods to use to ensure that your portfolios are protected on the downside. It's no guarantee. That's something
Mhm.
that we need to be aware. And so one of the other things that to connect to your previous question, if somebody tells you this is guaranteed,
Yeah.
cannot lose money, that's the point at which you just turn around and run away.
Yeah, you could
If it's
say run.
guaranteed and cannot lose money, you are about to be you're about to be taken to the cleaners. Nothing is guaranteed, but there is a way to increase the chance, and the,
Okay.
the way to do that is to be careful of your downside. Be careful of the things that can really go wrong, and construct portfolios that minimize that.
Mm.
And of course, I discussed that in more details, but that's for those who are interested. So comprehensive planning and making sure that your investments are in the right place, and that you don't panic sell when things go wrong. Also, for your business listeners, one of the most important thing for businesses is that lots of business owners forget themselves because they
Mm.
want to build a business, they want to work on it. But there is
Right.
the important thing: what about your retirement? What about your
Mhm.
saving? And one of the most important things there is a retirement plan for your firm,
Mm.
because the advantage of that is, a, you save on your own taxes. You also create a tool, the second most requested benefit by the employees. You help them save for retirement and lower their taxes. And in the end, if it's very well designed, there are many ways to save a lot of money on your side. I would say, put it away for retirement plan is better than giving it to the IRS.
Yeah,
I think we
definitely.
can do much better with it than IRS can. So um, it is important to set it up. And a lot of times people think that it's expensive. Actually, in the Secure 2.0 Act that was just passed in December, they increase the rebates for setting up those plans. So you basically have tax credit for setting up a retirement plan in your business, as well as there is the ability to be in the multi-employer plan. So if you want to be part of more kind of more streamlined plans, that's also possible. So I would say, don't forget yourself. Yes, it's
Mm.
great and very interesting to build your own business, but you need to be able to make sure that there is something left over for retirement, and that your employees also have something to rely on later on.
Gotcha. Now, there's gotta be somebody who is freedom loving, free thinking, and want to talk to somebody who is not having the conflicts of interest. How would people get a hold of you, and what would you suggest that they do if they've been
The
listening?
easiest thing is you can go to my website, which is www.hbria.com. Honey Badger Registered Investment Advisory, hbria.com. You can read there a little bit about me. You can see some of the case studies, and there is plenty of places where you can either schedule an appointment or just send me an email, send me a form, and I'll get in touch with you.
That is outstanding because I'm one of those people who have done just that. And you've got to hear and read what Bozidar has been writing and speaking about. I can't encourage you and recommend him highly enough. Bozidar,
Thank
thank
you.
you so much for taking out some time from your schedule. I really appreciate the time that you spent with us today.
Thank you so much.
You bet. So if you've been listening to the Doctor of Digital podcast, especially at the end here, get in touch with me. You get a free complimentary website analysis, and I'll tell you how well your website is working or why it's not working. So until next time, if you want to read a little bit about my background, Burning America, get a hold of me as well. You can read that. Until next time, thank you for joining us today, and Bozidar for our special guest this morning. Until next time, This is the Doctor
Thank
of
you.
Digital signing out. Deus Volt.
Thank you.
Thanks.